Welcome back, Join Odds fans. Jimmy and I are both excited about this video. We've got some good content, hopefully some good entertainment for you too. We always try to bring you entertainment and content combined. So today we're going to be talking about our lessons learned from The Wolf of Wall Street, specifically the scene with Matthew McConaughey and Leonardo DiCaprio, where Leo's getting introduced to how the game is played on Wall Street. This short clip, if you're paying attention and know how Wall Street works, really reveals a lot about how the game is played.
And for me, this video idea has been in the back of my mind for probably since we started making these videos. But I still can't believe that after people watch Wolf of Wall Street and The Big Short, there wasn't a massive run on the market.
It's crazy. You know, I actually I read this book probably 4 or 5 years ago. It's a fantastic read for anybody that's interested. He really gets into a lot of this, a lot of the stuff he talks about that's brushed over in the movie. And the guy's, an impressive individual, no matter how you slice it.
He's a great sales guy.
Yeah,
any way you slice it.
Yeah, and just a big vision. You know, obviously he stepped in some gray and some black areas, but we don't have to get into all that today. So we're going to start you off here with a little clip from the movie. Just.
Okay, we just started with that clip just because I love that clip, and if you watch our videos, you know we found the tech version of that song, and that's now our intro music. But what we want to go over is a couple definitions real quick, and this is from How I Lost $1 Million in the Stock Market. It's on Tim Ferriss's book list. Taleb talks about it all the time in Anti-Fragile and in The Black Swan.
When did you read that book?
What? When I lost $1 million?
Yeah.
This winter.
Oh, cool. All
so... It's a phenomenal book. We could do a whole video on the merits of that book. But the best part about that book is it has the best definitions I've ever seen comparing investing, trading, speculating, betting, and gambling. So to start with, investing is parting with capital with the expectation or safety of principal and an adequate return on that capital in the forms of dividends, interest, or rent. Wow. Interest and rent. That's what we deal with. All day, every day. So trading, we don't really need to talk about trading. But speculating, we want to talk about, this whole video is about the difference between speculating and investing. Speculating in its simplest form is buying for resale rather than for use or income, as in the case of commodities, financial instruments, respectively. Speculating is parting with capital in the expectation of capital appreciation. I'm at the point where I hate that word. Yuck.
Yeah. It's terrible. You pay huge taxes on that type of money, and there's just a lot more risk involved. So we're going to get into these and how they apply to different forms of investing, and specifically this movie that we're getting involved in.
But cut that shit. Investing is not looking for appreciation. That's the whole point of this video, and luckily we have Matthew McConaughey to help us explain that.
What can I bring for you on this glorious afternoon?
Well, Hector, here's the game plan. You're going to bring us 2 absolute martinis. You know how I like them, straight up. And then precisely 7½ minutes after that, you're going to bring us 2 more. Then 2 more after that, every 5 minutes until one of us passes the fuck out.
Excellent strategy, sir.
I'm good with water for now, though. Thank you.
It's his first day on Wall Street. Give him time.
I gotta say, I'm incredibly excited to be a part of your firm. I mean, the clients you have are absolutely...
Fuck the clients. Your only responsibility is to put meat on the table. You got a girlfriend?
I'm married. I have a wife. Her name's Teresa. She cuts hair.
Congratulations.
Thank you.
Think about Teresa. Name of the game? Move the money from your client's pocket into your pocket.
Right. But if you can make the clients money at the same time, it's advantageous to everyone, correct?
No. Number 1 rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers.
So that was a nice clip. Now, even if your broker or whoever you work with isn't like McConaughey, who says F the client. At the end of the day, he's right. The number one rule of Wall Street is no one knows whether a stock is going to go up or going down. Everyone is simply speculating. And what I love about real estate is when you invest in real estate for cash flow in general or for a private loan, you're actually investing. You're parting with capital with the expectation of either interest or rent or cash flow. That's not part of the definition, but it's the same thing.
Yeah, and I think actually Rich Dad Poor Dad covers it in his book. He talks about the concept of having a broker, and a broker is kind of short-term language for someone who's just as broke as you are. But you got to understand how people are incentivized, right? People respond to incentives, and a broker gets paid when you either buy or sell. So what is he focused on making sure happens? He's focused on making sure you buy or sell,
right?
And focused on making sure you're constantly moving that money around.
And he still makes money when you sell to get out because it was a bad trade.
Of course, it makes money both ways.
I've always had an issue with that.
Yeah.
And the Kiyosaki line is, and I say this to my wife all the time, like, why do they call them brokers? Because they're broker than you.
Yeah.
It's all a fugazi. You know what a fugazi is?
Fugazi. It's a fake.
Yeah, fugazi. It's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real.
Right.
All right? Stay with me.
Mm-hmm.
We don't create shit. We don't build anything.
No.
So if you got a client who bought stock.
All right, Fugazi.
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 So who is he? It's a wazi.
Yeah. Well, all he's talking about here is unrealized gains. It's appreciation gains. It's not cash in your pocket. All they have, your stockbroker has, even your mutual fund guy, he is not expecting you to get a return from dividends, right?
Correct. Yeah.
Only play he has is appreciation. And what we always say in the joint ops office is you can't eat equity. And we don't care about paper gains.
No, it's all about cash flow.
And once again, we're going to go back to real estate. Even if our properties lose value, and I know in 2008 being underwater was a panic word, and I think that was just people trying to get people riled up. Even if it doesn't appreciate, if you're still bringing in cash flow every month, it doesn't matter.
Exactly. If you look at the real estate investors who got themselves into trouble versus the ones that were able to survive, it's the folks who were buying and actually speculating versus those who were investing. And this happens in the real estate arena too. It's not just limited to Wall Street. You can speculate in real estate as well by building new homes versus buying a cash flow asset. So it still happens in real estate, and that's why we focus on cash flow backed properties, because if the price goes up, $10,000 or down $10,000 in a year, we don't really care because that property is still spitting off cash flow each and every month, and we're getting our return that way. And any appreciation is just a cherry on top. It's a bonus.
And then whoever this guy was in real life, I forget the name of the broker, but he may be saying it in a very crude way, but there's plenty of intellectual academics who also have this same belief. It's called a random walk down Wall Street. There's basically a theory in Wall Street. You could put a bunch of sell sheets on the board, throw darts at them, and randomly you'll perform about as well as the market's going to perform. Yeah,
and if you actually, I think they've actually done real studies like this. If you look at the percentage of brokers or investment firms that beat the S&P 500, it doesn't look too good. And I think that's where he comes up with this. I read this book back in college, so it's been 10 plus years now, but that's the basis of his argument is most brokers don't ever even beat the standard market returns. So I think he averaged.
Most mutual funds definitely don't.
Yeah,
they don't even get close.
Yeah. So
the main thing is short run changes in the stock price cannot be predicted. For me, a red flag word is if my return depends on someone's prediction, I'm out.
Yeah, and you got to understand nowadays with high frequency trading. You're playing against like computer algorithms that can execute trades way faster than you can. They've built out like data centers right next to Wall Street just to be able to do this.
You just can't play that game
Flash
anymore.
Boys.
Flash Boys is a great book that talks about that.
Yeah.
Same guy who wrote The Big Short. All right, back to Matthew for a second. He's got a great concept on.
At 8, and it now sits at 16, and He's all fucking happy. He wants to cash in, liquidate, take his fucking money and run home. You don't let him do that.
Okay.
Because that would make it real.
Right.
Realized
What do
gain.
you do? You get another brilliant idea. A special idea. Another situation. Another stock to reinvest his earnings and then some. And he will every single time because they're fucking addicted. And then you just keep doing this again and again and again. Meanwhile, he thinks he's getting shit rich, which he is on paper. But you and me, the brokers, we're taking home cold hard cash via commission, motherfucker.
Right.
What's really incredible is that they can get away with this type of crap. Honestly, it's insane.
But to me, it's like going to Vegas. They're getting fees for entertaining you.
Yeah.
They're gambling.
Yeah, for sure.
You know, I've invested in these. I've done it. You know, you look at your phone, you get your Ameritrade, and you see it going up or down. And even though it's not money in your pocket, you feel good.
Yeah, and you're constantly checking it because, like, I mean, I just had mutual funds. I had, like, I don't know, not a whole lot in there, but when I was in college, I think I had $4,000 or $5,000 in mutual funds. I would check it at least a couple times a week, and it's mutual funds. I mean, come on, it's not making that much money, but yeah, it's pure addiction. You get that adrenaline rush from wanting to check to see if it went up or down.
And then. And Fooled by Randomness, Taleb talks about this all the time, how it's the volatility is almost like an entertainment payment for the so-called investor. And so if you ever read What I Learned Losing $1 Million, he does a full chapter on addiction, how people make bad trades and do bad things because they're addicted to the action, the euphoria, the paper game. This is my absolute reason why I hate qualified plans. I hate them for a lot of reasons, but here's my utmost reason. Because when I worked in a corporate company, people would look at the number on that qualified plan and feel good about it, even though they couldn't touch it, even though it wasn't liquid, even though it wasn't money.
Yeah.
And even though in a second it could be gone.
Yeah, it's insane.
And people found out about that in 2008. But that's the difference between a paper gain and a realized gain. And people are addicted to this. I've traded options and whatnot, and it feels good, even though you haven't realized your gain to see that it went up.
And it's great. It's like, all right, hey, you know, if you made 20%, you know, this past year on your stock portfolio, good on you. But guess what? Like, that money is always on the table. We've got this concept we like to talk about of taking your chips off the table. With real estate, with investment, with a cash flowing backed security, whether a private debt instrument, making a private loan, or actually buying a cash flow property, you can take your chips off the table. You know, this comes from the world of poker. If your bankroll, your entire bankroll is always on the table, it's always at risk. And you know, even if you made 20% this year, tomorrow it could crash 30%. And guess what? All that money you made on paper, it instantly vanishes overnight.
And emotionally, it's probably even a more painful gain because it's a bigger loss.
Yeah.
If you made 20 grand one year and lost 50, really you only lost 30, but you feel worse because it's a $50,000 loss.
Yeah, good point.
And
yeah.
I'm an emotional guy. I'm a quick start, high energy guy. So what I love real estate investing is it takes the emotion out of it. I'm not looking at my zestimate of the value of my property every day.
Yeah, we're not going out and getting an appraisal every week.
Right.
Like, real estate moves slowly, so it forces investors to create value and focus on cash flow.
Like, we get none of the euphorias of paper gain. We either make cash flow at the end of the month or we don't.
We get euphorias on rent checks coming in the door.
I do like that. I love it. I get excited.
Yeah, but it's an income stream. And that's the great thing is when you're investing in real estate, you're actually investing in an income stream, just like if you were buying a dividend-paying stock. But, you know, so we're not focused on speculating.
And guess what? That's good for me. Yes, sir.
I'll start back here.
Revolutions. You follow?
Revolutions.
Keep the clients on the Ferris wheel. And it goes. The park is open 24/7, 365. Every decade, every goddamn century. That's it. Name of the game.
Okay, so what he's talking about here with revolutions is he's talking about constantly turning your money over. And that's what brokers do on Wall Street. Like we talked earlier, they are incentivized for you to buy and to sell because that's when they make their money. So they're taking their money each time you buy or sell a stock, whether you made money on it or you lost money on it, they're making money. So they make money when the market's up and they make money when the market is down. and sometimes they'll create the atmosphere of the market being up or being down, or coming up with a new great idea for you to put your money into, just to get you to cash out on what you're currently invested in and put your money into something new, because that makes them money.
And when I saw him do the revolutions, to me it reminded me of the rat race. Like, keep them addicted, keep them chasing the dollars, keep it going. And Kiyosaki all the time is talking about the rat. And then the other time when I think of this video, I remember, so James Altucher, we subscribe to his newsletter. If you haven't heard of him, he's an investing guru, but he's kind of an entrepreneurial genius. And the other way, I kind of agree with him. He says investing in mutual funds, investing in qualified plans, is just another tax on the middle class.
Yep.
That hard-earned money, that is, you work, you get taxed, and then what's left, you invest. And then the fees are another tax on top of what you've already been taxed.
Yep.
So keep people addicted to these paper gains. And he goes into investing as a tax on the middle class. There's at least 5 levels of fees stripped out of your hard-earned cash before your money touches an investment. To me, that's sickening.
Yeah, it's insane. You spend hours and hours building up your base, and then once you actually put your money to work, everybody else is taking a slice of your pie.
Right, and all these investment dollars generally are after-tax dollars, so it's already been taxed. So like you'll hear every one of our videos, get off the Ferris wheel. Cash flow is always king. And we'll send you off with the rest of this clip, which I absolutely love.
Mm-hmm. Mm-hmm.
Feel free to join in on your end too, everyone watching.
I mean, this guy may be an asshole, but it's still a great clip.
Oh, it's fantastic.
It's still a great song.
With a common denominator. Keep it up with me. The CEO. How the money comes in, the parade comes to town. Going down Broadway is a one-way street, whichever way I go.
Well, thanks for tuning in. I hope you enjoyed it. We'll talk to you later.
Yeah, and you can subscribe to our YouTube channel. We're bringing you 20 entertaining, content-filled videos like this each and every month. We'll also have some turnkey investments that you can take a part of if you go to joinoutproperties.com. If you want to talk to us, you just want to get some clear ideas on how to use real estate to help build your wealth and build passive income for yourself, go to joinoutproperties@gmail.com. Thanks.
Great plug. That was beautiful.
Yeah, I'm getting pretty good at it, right?
Awesome.